As Rob said, my name's Steve. I work at H&R Block here in town as well as in Perth. So I've been in the business about 10 years. I do have a personal connection as well to FASD, so I do have a daughter who has FASD, and we went through this process, I guess, within the last year. So I've kind of been on both sides of the desk, so it's something that I'm intimately familiar with. And hopefully I've got your perspective as well as someone on the other side of the table as well. So. All right, let's jump in. So here's the agenda today, and it should, I think, really should be divided into kind of two sections. So the disability tax credit, I kind of think of it as the doorway into these other credits or benefits. So really, you have to go through an application process, get the disability tax credit, and then you can take advantage of different government supports or benefits, and I'll get into kind of each one in more detail as we go through here. So the disability tax credit, I think of it maybe as a hoop you need to jump through. So it's administered by CRA, is the Canada Revenue Agency, so the same people that handle income tax returns. They also administer this program because it's part of the Income Tax Act. So they're the ones who actually make the determination based on the application, does this person qualify for the disability tax credit or not? So the criteria, which I think would apply to FASD, it applies actually to a wide variety of disabilities. So it could be vision, could be hearing, mobility is a common one. But the one that I think would apply to us here would be with respect to cognitive functioning. So I'll just read the criteria here. Markedly restricted in performing the mental functions necessary for everyday life. So as examples, that'd be self-care, memory, problem solving, goal setting, and judgment. Might not be perfectly clear exactly to whom that might apply. How I kind of look at it, it gets into more detail in the application as well as the Income Tax Act itself. But essentially, if you look at a child with a disability, if they need substantially more assistance or supervision compared to a similar child of the same age, they might qualify for this credit. So my expectation and also my experience with FASD is that likely most of your dependents would qualify. I don't know kind of everyone along the spectrum, so I'm not a medical expert, but just in my experience, I think most people would be eligible for this. So the actual process, it's relatively straightforward in the kind of simplest terms, but it can get a little more complicated. So there's a form. I've got some actually printed up here. We can hand them out later if anyone's interested. But it's a form you fill in page 1 of the application, but then the rest needs to be filled in by a medical practitioner. So in our case, with FASD, you'd likely be looking at maybe your GP, your family doctor, or if you're seeing some kind of a specialist, a pediatrician, they would be able to complete the form as well. And it's basically a checklist. So do they meet the criteria of markedly restricted? And it goes through kind of some of the details of that criteria. When did the condition begin? And then an extra section for notes. In my experience, most of the, what I see across my desk anyway, most of the medical practitioners are familiar with the process, so they have basically a form letter attached which they update to match your patient, and they attach that to the form. And most of the time, it's worded in such a way that you don't run into issues with getting denied, but unfortunately, not always. And I'll get into the hoops you might have to jump through there. So basically that's it. They fill in the form. Normally they'll charge you $30 to $50 roughly. And then you mail that form into CRA. They make the determination based on what the medical practitioner filled in. Does the dependent qualify or not based on the criteria in the Income Tax Act? Then a letter goes out. Hopefully it's good news, but if not, there are steps you can take. So you could be denied, or if you're approved, it'll typically say for a specified period. So 5 years is common, 10 years is common. Very rarely you might get an indefinite approval, but I don't see that too often, even with severe and permanent disabilities. Often you have to go every 10 years, go through the whole process again. visit a doctor, get the form filled in, send it in. All right, so hopefully it's good news, but like I said, denials do happen. So usually I think they do go through the first attempt from what I see. I was fortunate enough, our application did go through right away, but not always the case. So a minority of cases you might see it's denied. If you do think your dependent is still eligible, so one of the great things about a group like this is you can compare kind of your experiences and the behaviors you see. If they're consistent with somebody else getting approved, you know what, then maybe you should look into it further. So you can provide additional information and request a review. So that'd kind of be step one. If that doesn't go through, you can file an official notice of objection. So you can do that, or you can get assistance with a tax professional or a tax expert to help you out with that as well. But it is a form you can find online. If you're comfortable with it, you can certainly do it yourself. If the notice of objection is denied, basically that means you're done for this round, but you can always submit a new application. So kind of in our business, I don't think we've had a denial for a notice of objection. Normally, you're going that route if you're very confident in your application. You say, look, based on what I've sent in, this should certainly qualify, and they'll look at it again. Basically goes to higher ups at CRA. They'll take a detailed look at it. We haven't had any of those not go through, but you could definitely submit another application if maybe the wording in the initial from the initial medical practitioner, maybe it wasn't quite what CRA was looking for. You can always get kind of someone else to fill it in. So if you got your GP to do it time number one, didn't go through, you can maybe get a specialist to do it the second time. They might have a little more experience with it. So you can always go back and do an application, and it will be backdated as far as 10 years based on what the medical practitioner fills in. So if they say the disability began in 2010, you'd be eligible for benefits back to that point. All right, so at this point we're getting into what are the actual benefits of going through this process. And hopefully I didn't scare anyone off. It is, again, successful most of the time. So it's just a matter of filling in a form, getting your medical practitioner to fill in the rest, and mailing it in. It can be as easy as that, or in some cases maybe a little more difficult. Yeah, exactly. So my advice is just don't give up if you feel like, based on kind of your experience with your dependent, don't give up if you think they qualify. There are extra steps you can take. So the first item I want to talk about is the child disability benefit. So this is automatically added to your Canada Child Benefit payment. So if you're receiving that CCB on the 20th of every month, this will automatically get applied, and they'll backdate it only automatically, though, 3 years. So if the disability began a longer period ago, you actually have to request that CRA pays out that additional amount. Why that doesn't happen automatically, I'm not exactly sure. It seems a little strange. I'm sure there's reasons, and it's not just hoping that people won't notice. But if you're looking at going back a substantial number of years, it can be a large amount of money. If you're not kind of keeping detailed track, that's an easy item to miss. So make sure if it's backdated more than 3 years, you request that additional amount. So each month you're looking at if your family net income's under under 66,000, roughly, it'll change every year. You're looking at an additional $230 a month, which can add up pretty quick. If you're looking at over 10 years, that's close to 30,000. So pretty substantial benefit. The next section will get a little more complicated. I didn't want to get too much into tax jargon here, so bear with me. I'll try to keep it straightforward and give you the broad strokes. So on your actual tax return, one of the big credits you'll see based on this being eligible for the disability tax credit is called the disability amount. And it's a non-refundable tax credit of about, for dependents over 18, you'd be looking at $8,000. For dependents under 18, you get an extra $4,000. So what that actually means, though, in terms of real dollars, is potentially a tax break of about $2,500. But again, that's roughly. Your mileage will vary based on your tax return and your tax situation. With a non-refundable credit, how it works is basically you need to have taxable income in order to take advantage of it. So you need to have income that you're paying tax on over about $13,000. So again, depends on other credits you're eligible for, but that's kind of a rough ballpark. So if you're making kind of north of $30,000, typically you'll be able to take advantage of that with no issues, but again, depends on your kind of personal financial situation. If you're supporting someone who's over the age of 18, so the last bullet point is that the claim needs to be made by the person with the disability first. So if this is a dependent and say they're working, but you're still providing financial support for them, you might still be eligible to claim the disability amount for them. The key, though, is as long as you're providing financial support. So if they're living in their own abode, they've got their own house, they're paying rent, you need to be providing some kind of substantial support that you might need to save documentation for. So if you're buying them clothes or food, or if you're helping pay the rent, you just need some kind of documentation in order to substantiate this claim. That's only if it's reviewed by CRA, though. So other tax return items that I think are fairly common that we might run into. Medical travel. This is actually eligible for everyone, so not just people who are eligible for the disability tax credit, but if you have to travel more than 40 kilometers to see a specialist or for medical services not available locally, you are eligible to claim a certain mileage rate as a medical expense on your income tax return. So that's something you might see with FASD if you're living in kind of a rural area, but that would apply to kind of anyone as well. If you're going to Kingston or Ottawa for treatments from here, that's a common one we see. And with medical travel, with medical expenses on your return, just to be clear, you won't always necessarily get a benefit from the first dollar. It has to be reduced by a percentage of your net income. So without getting kind of into all the details, you won't necessarily get money back based on the first dollar there. The Canada caregiver amount, so that's another claim you can make on the tax return. It's an extra non-refundable credit, but you could be looking at taking advantage of that for someone with FASD. They're automatically eligible if they have the disability tax credit if they live with you, or if you're providing support and they live somewhere else. Eventually, they reach the age of majority, so they're over 18, they might qualify themselves for some tax credits. So the working income tax benefit has a disability supplement, as well as there's a disability supports deduction, which I don't think is really geared towards FASD, but if you have to, the disability supports deduction is if you're employed and you need extra support as a result of your disability. So common would be if you have vision issues or hearing issues, if you need special equipment, but also job coaching services are eligible. So potentially, I don't know, we might see someone with FASD in an employment situation, they might need a little extra help, that could be eligible. All right, and getting into the last section, or the last benefit I wanted to talk about, is the Registered Disability Savings Plan. And this is not a widely used program, but it's, I think, very beneficial and worth taking a closer look at. So essentially it helps individuals with disabilities or their parents or caregivers save long-term for them in kind of retirement or later years, maybe if you're not around. The way it functions, it's kind of like an RESP in that money you put in isn't tax deductible. So when you put money into an RSP, I think most people know you get a deduction on your tax return, it gives you some money back. With this, that's not the case. So it works the same as an RESP contribution. You put in after-tax dollars, so you don't get a tax break on it. But what happens is the money in the account grows tax-free, and as well it's eligible for government benefit programs. So they have the Canada Disability Savings Bond and the Canada Disability Savings Grant. which I'll kind of get into here. And then how you get taxed on it eventually is when the person with the disability makes the withdrawals down the road, they pay tax, depending on their income, on the grant or bond money as well as the investment income. So the bond, how it works, you need to have an open RDSP account, and as long as you're eligible for the disability tax credit, you can open one of these accounts for that person. So the account must be open. You don't have to put money in to get the bond, but there's income threshold. So if your income's under $30,000, you automatically get $1,000 up to, I think the maximum grant is $20,000. So all you have to do is open the account. Government will put $1,000 a year. If your income's over 46, you don't qualify, and this is family net income. And if you're somewhere in the middle, you'd get a prorated amount. One of the interesting things is the family net income for children is based on their parents. Makes sense. So it'd be mom or dad or both. If they're 18 or older, though, it's based on their income. So especially in kind of earlier years, I'd imagine a lot of people with disabilities would qualify for that amount once they're done school, right? Getting into the grant, so if your income's over that threshold, or even if it's within that, if you put money in, the government will match. So if your income, your family net income's under $92,000, the grant's pretty generous. You're not going to see, I don't think, a better program than this. They'll match 300% of the first 500 and 200% on the next 1,000. So that means if over the course of the year you put in 1,500, the government's putting in 3,500. That's pretty good matching in my mind. Yeah. Good rate of return. And then if you're over 92,000, again, that's family net income, then the grant's matched 100% of the first 1,000. So still good, not quite as good, but I think most people fall in the first section. And if you look at over the course of, I've just got 4 years here, it might be a little small for you guys, but basically if you put in that 1,500 every year for 4 years, that's $125 a month. At year 4, you're looking at $20,000. That's assuming a rate of return of 0. Hopefully your financial advisor is maybe getting a little better than that. Depending on the market, maybe it'll be a little smaller. One thing to look at that too is that's about half of the child disability benefit that gets added to the Canada Child Benefit. So if you're able to squirrel away half of that extra benefit per month, you're looking at potentially saving up a pretty substantial sum. With the RDSP, there's a lot of limits as well. So there's like certain lifetime limits. There's rules around if they stop qualifying for the disability tax credit. But I just want to give you guys kind of the broad strokes of the benefits of applying for the disability tax credit. And that's essentially what I wanted to talk about today.